right? So if you come to the ICAI website, right, you come to the students, you come to the Board of Studies Knowledge Portal, and then you reach to the Board of Studies Knowledge Portal. Over there, you have the amendments and developments for the final. In that, you have the Advanced Auditing and Professional Ethics. Right, so this is the 19-page document, right? So it is not any secret document that is there very much on the ICI website, right? So even though if I don't provide it to you, it is there on the ICI website over there, right? So right now what we will do, we will discuss this 19-page document first, because one, in this document itself, there are the changes regarding the peer review also. And the audit, safely audit committee, corporate governance, those changes we've already incorporated in our discussion, right? So those have already been covered. So mainly what we need to cover is regarding the NBFC. They've come up with some base layer, middle layer, upper layer, and the top layer of the NBFCs, right? So the different classification of NBFCs over there, and another is regarding the peer review, right? So we will now go into this amendment over here, right? So do you understand from where I took the file? Right, from the ICAI website. Okay, now we studied the definition of small company. First, there is a revision to the definition of the small company, which says paid up share capital does not exceed the 4 crore or the turnover does not exceed the 20 crores. Or earlier it was the 2 crore and the, right, it was 2 crore and 20 crore. Now it has been revised to the 4 crore and the 40 crore. So that is the first change, right? The 4 crore and the 40 crore, right? So that's the first change which we have over there, right? The definition of the small company. Earlier what it was, 2 crore and 20 crore. Now it is 4 crore and the 40 crore. Okay, then SEBI LODR, all these changes we've already covered in our discussion in the class today, right? SEBI LODR, all the changes we have covered in our discussion. You remember the role of the risk management committee, right? We talked about the role of the risk management committee, which is a trending question, right? So this has already been covered in the class. And then after that, coming to the audit of the NBFCs, right? So I'm discussing with you the amendments which have come for the May 23 exams downloaded from the ICAI website, right? So right now I'm talking about the audit of the NBFCs, right? So taking a deviation from the chapter of the peer review. I hope you all are in realization of what is happening. Okay, otherwise they'll say, okay, ma'am, peer review, then NBFC, no problem. Okay, no, right? So we are discussing about the NBFCs. What is now, these students who will come late, they will wonder, but now what to do? They come late, no. Okay, right. So anyways, what we had studied regarding the types of NBFCs, one, NBFCs which are mandated to be registered with the RBI, and second, which are exempted from the registration with the RBI. But now they say we have created one more classification of the NBFCs called as the NBFC base layer, then the NBFC middle layer, then the upper layer, and the top layer. And so interestingly, they say the top layer will mostly remain empty only. Right? The top layer will mostly remain empty only, right? So mainly they are going to have the NBFCs in the base layer, then the NBFCs in the middle layer. So yes, then you have the middle layer, then you have the upper layer, and then you have the top layer, right? The upper layer, and then finally what you have over there is the top layer. Okay, when will your NBFC be considered to be an NBFC in the base layer? One, it has to be a non-deposit taking NBFC, and the asset size has to be less than 1000 crore. Right, so what is first possibility over there? It is a non-deposit taking NBFC, and then the asset size is below 1000 crore. That is A. Then what is the B? It is an NBFC which is undertaking the following activities. What activities it is undertaking? Peer-to-peer lending or the account aggregator. So depending on the activity. So peer-to-peer, or it is into the account aggregator, or it is into the non-operative finance holding company, or not having access to public funds and not having the customer interface. So if you are doing any of the following four activities. So what is the third activity over there? Non-operative finance holding company and not having access to the public funds and does not have the customer interface, right? Then if these are the activities you are engaged into, right? So these are the NBFCs which will come in the base layer. Are you understanding that? If I write it little bit from the left hand side aligned, right? So NBFC base layer, middle layer, then the upper layer, and the top layer. In the base layer, what you have over there, NBFCs having the non-deposit taking and asset size of less than 1,000 crore. And B, if the NBFC is into the peer-to-peer lending, or it is an account aggregator, or it is a non-operative finance holding company, or it does not have access to the public funds, or it does not have the customer interface. It does not have the customer interface. That is the base layer NBFC. Then middle layer NBFC, it says all deposit taking NBFCs irrespective of the asset size. So here we said non-deposit taking. Now here what we say, deposit taking NBFC irrespective of the asset size. So asset size could be any. Here there is no requirement of the 1,000 crore or anything, right? Then for non-deposit taking NBFC, right? So middle layer, one deposit taking NBFC of any asset size. Then B is the non-deposit taking NBFC, but now having an asset size of more than or equal to 1,000 crore, or non-deposit taking NBFC with an asset size of 1,000 crore and above, because less than 1,000 crore was covered under the base layer. So 1,000 crore and above is covered under the middle layer. And if it is undertaking the following activities. Now, what are the activities that they are talking about over there? One, the standalone primary dealers. Then the infrastructure debt fund company, right? So standalone primary dealers. Then the infrastructure finance companies. Then you have the core investment company, housing finance company, right? The core investment company, the housing finance company, and the last one is the infrastructure finance company. So infrastructure debt fund, right? What is after the standard primary dealers? You have the infrastructure debt fund. Then you have the core investment company, housing finance company, and the last one is the infrastructure finance company. That is the middle layer, right? Then after that you have the upper layer. Upper layer, it says based on the asset size, the top 10, right? The top 10 eligible NBFCs in terms of their asset size will always reside in the upper layer irrespective of any other factor, right? So upper layer is, what does it say? Top 10 eligible NBFCs which have been regulated, determined by the, specified by the RBI, identified by the Reserve Bank, as warranting the enhanced regulatory requirement based on a set of parameters and scoring, right? What does it say? It will always cover the top 10 eligible NBFCs in terms of their asset size, which will always reside in the upper layer, right? So top 10 in terms of their asset size, they will always reside in the upper layer irrespective of any other factor, and the top layer will ideally remain empty, and this layer can get populated, that is the NBFCs can come in this category if there is a substantial increase in the systemic risk from specific NBFCs in the upper layer, right? So from upper layer it could be shifted to the top layer. Are you understanding that? And such NBFC shall move to the top layer from the upper layer, right? When there is a substantial increase in the potential systemic risk. Are you getting the words over there? When there is a substantial increase in the potential systemic risk. Okay, right. Then now this categorization of NBFC, right? So you have the upper layer and then you have the top layer. Top layer, what does it say? When there is a substantial increase in the, right, substantial increase in the potential systemic risk. When there is a substantial increase in the potential systemic risk. Okay, right. Now, based on the kind of activities, what is the classification? They say that P2PAA, that is the peer-to-peer lending, account aggregator, non-operating finance holding company, and NBFC without public funds and without having the customer interface will always remain in the base layer, right? So these four are always going to remain in the base layer. So always going to remain in the base layer. Right. Then after that, what does it say? The NBFC deposit taking core investment company, IFC and HFC. Right. So deposit taking company, we have the deposit taking company. Then after that, we have the CIC, IFC and the HFC. What does it say? These four companies, they can either be in the middle layer or they can be in the upper layer. So they can be in the middle layer or the upper layer. Again, these three, they can be in the middle layer or they can be in the upper layer. But what does it say? NBFC, which is the SPD, and the IDF. SPD, that is the standalone primary dealer, and the infrastructure debt fund, they will always remain in the middle layer. Right? So what does it say? SPD and the IDF, they will always remain in the middle layer. They will always remain in the middle layer. Right, so do you understand that deposit of more than 100 deposit taking NBFC, it could be in the middle layer or the upper layer. Then CIC, HFC, IFC, it could be in the middle layer or the upper layer. But what does it say? SPD and IDF will always be in the middle layer, right? It will always be in the middle layer. And the remaining NBFCs, that is ICC, MFI, and the MGC, right? So now three more which they are talking about over there: the ICC, Investment and Credit Company, then the Microfinance Institution, and also the Mortgage Guarantee Company. What does it say? They can come in any of the layers of the regulatory structure depending on the parameters, right? So they could come in any of the layers. So these three companies, they can come in any of the layers. Which three companies can come in any of the layers? Investment Credit Company, Mortgage Guarantee Company, and the Microfinance Institution. They can come in any of the layers. And government owned NBFC shall be placed in the base layer or the middle layer, as the case may be. They will never be placed in the upper layer till the further notice, right? So one more last point over there, that government owned NBFCs will be placed in the base layer or the middle layer, and they will never come in the upper layer till the further notice. Okay, right? And then after that, they've again explained NBFC BL means what? Base layer. NBFC ML means what? Middle layer. And UL means what? The upper layer. So that is one classification of the NBFCs that they've gotten over there. Very important in the MCQs. I can see questions coming regarding which will always remain in the base layer, which will always remain in the middle layer. Those type of questions could be coming, or which could be coming into any of the layers. Okay, right? Then forensic audit, I don't know, but they say that everywhere the word forensic audit is replaced with forensic accounting. So, you know, God is always right, ICI is always right, boss is always right, always right. So forensic audit in this chapter, including the name of the unit, stands changed to forensic accounting. All the references to forensic audit throughout the study materials stand changed to forensic accounting. Similarly, forensic auditor will now become the forensic accountant. Okay, so be it. Like, now what to do now? You just have to acknowledge, okay, so be it. Okay, right. Then after that, now coming to the peer review, right? So do you understand the change over there? Forensic audit has become the forensic accountant. Yes, forensic accounting, and forensic auditor has become the forensic accountant. Okay, auditor has become the forensic accountant. Okay, now coming to the statement on peer review will be replaced by the term peer review guidelines or the guidelines. Okay, then the term technical, ethical, and professional standards as applicable, including the other regulatory requirement, shall be substituted with technical, professional, and ethical standards as applicable, including the audit quality maturity model. This is a new concept ICI has come with. You know, just as the credit rating agencies, they give the credit rating, you're a triple plus, double plus type of a company in finance. It says the CA firms, they will also get a rating of regarding what is the quality of the services provided by your firm. So ICI has developed this new concept called as the audit quality maturity model, right? So what does it say? Shall be substituted with technical, professional, ethical standards as applicable, including the audit quality maturity model wherever applicable, or any other regulatory requirement as the case may be prescribed by the council or the committee. So now what does it say? Technical, ethical, professional standards, including the audit quality maturity model, including the audit quality maturity model. Okay, right? And at the end of the explanation, then reviewer shall mean a person who is duly approved and empaneled by the board. Then branch peer reviewer. What is branch peer reviewer? If you're doing the peer review of any branch of the practice unit, if you're doing the peer review of any branch, right? Can Deloitte have various branches across India? Yes. So if the one particular Deloitte, if the peer review is being done, so that is the, but yes, that reviewer would be called as the branch peer reviewer. And what are the qualifications, obligations, and duties? Same that as of the reviewer, right? Then they have defined a new concept over there called as the new unit, right? So now I'm talking about the chapter of the peer review, and there they have introduced a concept of the new unit. And what does it say? You have received a request for getting the peer review done, and since the date of your establishment, you've not completed 12 months, right? Since the date of your establishment, you have not yet completed 12 months, and whether or not you have provided the assurance services. So either you have provided or you're not provided assurance services, but since your date of establishment, you've not yet completed 12 months. And second, since the date of your establishment, you have exceeded 12 months, but you have not provided any assurance services, then also you will be considered to be a new unit. So when will you be considered to be a new unit? One, what does it say? Whether you've not yet completed 12 months. And then what does it say? Whether or not you've done the assurance services. But you've exceeded 12 months, but still you're not doing even a single assurance service till date. Then again, you will be considered to be a new unit. Then again, you will be considered to be a new unit. Okay, right? So that's the definition of the new unit. Then we have the peer review board. Scope of peer review. Did we discuss the scope of peer review today? What did we say? Compliance with the technical, ethical, professional standards. Then quality of reporting, assurance services, training program. What does it say? After training program, you need to add one more point over there, right? The self-evaluation of the audit quality maturity model, right? The self-evaluation of the audit quality maturity model. Right, so in the scope of peer review before the training program, rather not after the training program, what is the point number 4 you need to add over there? The self-evaluation of the audit quality maturity model. Will that be covered in the scope of peer review? Yes, it will be covered in the scope of the peer review. Right, then what we had studied regarding technical, ethical, professional standards, accounting standards under issued by ICAI, accounting standards under 133, and accounting standards under the Ind AS under the 133. Then we talked about the standards, then the framework and the provision. After that, it said you will add the 7, which is any other technical, professional and ethical standards and other standards issued by any authority governing the profession of chartered accountancy. Right, so that is what is added to the definition of the technical, ethical, professional standards. So whatever first 6 points we had, though, will those 6 points continue? Yes, and there is one more point added over there. Any other technical, professional, ethical standards and the other standards issued by any authority governing the profession of the chartered accountancy. Okay, right. Then in the definition of assurance engagement, do you remember? We said presenting before the tax authorities, preparing tax return, compiling financial information other than financial information, expert opinion, expert witness, management consultancy, due diligence services. After these 8, a 9 is added over there. What is the 9 added over there? Any other service rendered or function performed by the practitioner not prescribed by the council to be an assurance engagement. So basically they want to say balancing figure. Any other service which you provide which is not an assurance engagement, that will also be excluded from the scope of the peer review. That will also be excluded from the scope of the peer review. Okay. Then they say earlier the practice units were classified before our break into level 1, level 2 unit. Now after the break, they are divided under mandatory, voluntary and the special case. You understand? What does it say? For the purpose of the applicability of the peer review, all the CA firms are to be divided as mandatory, you need to get a peer review done, voluntarily you want to get a peer review done, or a special case. Special case is same to same. Special case where information is received from the secretary of ICI or the disciplinary directorate or any other regulator, right? So then in that case, a special review would be conducted. And then other, what are the two options over there? Mandatory and voluntary. And now mandatory, they say phase wise we will make it mandatory. So they have decided 4 phases over there. Phase 1, phase 2, phase 3 and the phase 4. Right, phase 1, it will become mandatory with effect from 1st April 22. Phase 2, it will become applicable from mandatory from 1st April 23. Phase 3, it will be applicable from 1st April 24. And phase 4, it will be applicable from 1st April 25. When will your practice unit come under the phase 1? In case if you are doing the audit of the listed entities. Okay, so then you are under the phase 1. Mandatory for you to get a peer review done. If you already have a valid peer review certificate, no problem. Second, they got the numbers of 500 crore, 1000 crore or the 500 crore. Does anybody remember these numbers we studied today in the applicability of the NAFRA? paid up share capital of more than or equal to 500 crore, or the turnover of more than or equal to 500 crore, or the loans, debenture, deposits of more than or equal to 500 crore. Then what does it say? Then you have to get the, or your firm is a practice unit is having 5 or more partners, right? Then what is the mandate over there? From 1st April 2023. Then what does it say? If it has raised the funds, right? So level 1, in case if it is listed, right? In case if it is listed, equity or debt is not level 1, phase 1, right? Then what is the phase 2? 500 crore, 1000 crore, or the 500 crore. Then what does it say? Or 5 or more partners. Then you are coming under the phase 2. Then what is phase 3? Which has raised the funds of more than the 50 crore, which have raised the funds of more than the 50 crore, or which is a public interest entity, right? So raised funds of more than 50 crore, or which is a public interest entity, or having the 4 or more partners. Then it comes under the phase 3. Right, then it comes under the phase 3. And if you are doing the audit of the branches of the public sector banks, if you are doing the audit of the branches of the public sector banks, or your practice unit is having 3 or more partners, then you come under the phase 4. Right, so branches of the public sector banks, branches of the public sector banks, and then you also have the 3 or more partners. Then what does it say? When will it be mandatory? With effect from 1st April 2025. Right, with effect from 1st April 2025. Is it clear to everyone? Phase 1, phase 2, phase 3, and the phase 4. Right, and apart from that, how the practice units have been classified as mandatory and the voluntary, and then the special case. Okay, right. Then after that, now coming to some other points over there, right? So this is the explanation. What did we say? Peer review board, maximum 12 members. Now they are saying minimum 6 members. Right, so maximum members were anyways given, but now what they are saying, minimum 6 members and maximum 12 members, and at least 50% should be the council members. So that is the same. Only what is the new point over there? Minimum 6 members and maximum 12 members, right? So minimum 6 members. Okay. Then as eligibility to be a reviewer, what did we say? 7 years of audit experience. Now that is to be read as 7 years of assurance practice experience. Right, so 7 years of audit experience we said, no? So that has to be read as 7 years of assurance practice experience. It's 7 years. You remember 7 years, then 10 year, 3 year, then the requisite training and the requisite test. So here it says 7 years of the assurance practice experience. Okay. Then the declaration of confidentiality shall be signed by all members of board and the board secretariat. Okay. Right. Now selection of practice unit and the appointment of the reviewer. Once upon a time, there was a time where they said that the entire peer review should be completed within 90 days. Then they said that the entire peer review should be completed with 60 days. Now I don't know what happened. They say the entire peer review process should be completed within 20 days. You understand? Earlier on-site review could not exceed beyond 15 working days. Then it could not extend beyond 7 working days. Now it cannot extend beyond 6 working days. And the on-site peer review cannot extend beyond the 6 working days. Okay. Now, how does it start? Now, here they have the form 1, form 2, and very interesting form, because the forms help you to remember the numbers also. Right. So, form 1 is the application come the questionnaire. So, how it can start? Either the practice unit sends the form 1 on its own to the peer review board. Are you understanding? The practice unit itself sends the form 1 to the peer review board, or the peer review board tells the practice unit that please send the form 1, and then the practice unit sends the form 1 to the peer review board. So either it could be initiated by the member, that is the suo moto, or the initiation can be taken by the peer review board. But in both cases, what should happen? The form 1 should reach to the peer review board. The form 1 should reach to the peer review board. Now, once the form 1 reaches to the peer review board, now the peer review board will give the choice of the 3 reviewers to the, right? Within 3 days, it will give the choice of 3 reviewers. So they are very good, kind people. 3 days, 3 reviewers. Within a time of 3 days, now once they receive the form 1, within 3 days, they will give a choice of the 3 reviewers to the practice unit. Then what does it say? You have to select 1 reviewer within 1 day. Right? Because now they have to finish the entire thing in 20 days, no? So now everything is escalated over there. So one reviewer has to be selected within the 1 day. Okay, so what did I tell you? Practice unit which desire to get itself peer review will make an application for the peer review in the application cum questionnaire in the form 1. In case the peer review is initiated by the board, the application cum questionnaire in form 1 should be submitted by the practice unit on the request of the peer review board secretary. Then what does it say? The application will be duly numbered. Okay, right. Then on the receipt of the said application cum questionnaire, name of 3 reviewers shall be recommended by the board to the practice unit within 3 working days. That's what I told you. Then the practice unit has to select any one out of the 3 recommended reviewers within 1 working day. So 1. Are you able to follow this? Right. Then the board shall appoint the peer reviewer selected by the practice unit in accordance with the guidelines. So now what will the board do? They will appoint the peer reviewer. Then the reviewer so appointed has to give the declaration of confidentiality in form 2 within 2 working days. Very good. Form 2 within 2 working days. Then what does it say? The practice unit shall also provide a copy of the application cum questionnaire of the form 1 which they submitted to the board to the reviewer within 2 working days. So earlier the form 1 to whom the practice unit had submitted to? The form 1, the practice unit, earlier they had submitted it to the peer review board. Now they also need to submit it to the reviewer. Are you understanding that over here? Right. So once the reviewer is selected within 1 day, then what does it say? Yes, the board will appoint the reviewer. Right. Then what will happen? Then there will be the appointment of the reviewer. Then the reviewer so appointed has to give the declaration of the confidentiality in the form 2. Has to give the declaration of confidentiality in form 2 within 2 days. Are you understanding? And then the practice unit has to submit the form 1 to the reviewer within 2 days. Are you understanding? The practice unit has to submit the form 1 to the reviewer within the 2 days. Is it clear to all of you till here? Right. So that is the first set of procedures regarding procedure for initiating the peer review. After that, you have the peer review procedure to be followed by the reviewer. Now, before commencement of the review, again, the reviewer has to ensure the declaration of confidentiality is furnished to the practice unit and acknowledgement of receipt. So declaration of confidentiality not only to be given to the board, it also has to be given to the practice unit, right? The declaration of confidentiality has to be given to the practice unit. Now what is in receipt of the, what has the reviewer received? He has received the form 1 from the practice unit. Once the reviewer receives the form 1 from the practice unit, he will intimate the practice unit regarding the proposed visit and the proposed sample selected to be kept ready. Right? Then the reviewer may seek for the further additional information, and this further additional information should be provided within 1 working day. Then the reviewer shall within 2 days of receiving the information from the practice unit select the assurance service engagements which he would like to review. Right, so what does it say over here? Once they receive the form 1, then they need to decide the visit, when they are going to visit, and also decide on the samples. They can also ask for the additional information. This information they has to be, yes, the practice unit has to provide within 1 day. Then what does it say? Within 2 days, the reviewer will now, of receiving the information, now they will select the assurance engagement which he would like to review. Then the reviewer shall plan for the on-site review, right? Which is visit for initial meeting and consultation with the practice unit. And how many days time after the sample has been selected? 2 days time. Earlier it was 5 days time. Right, so now what does it say? At least 2 days working, 2 working days to keep ready necessary records of the selected assurance services in the form 5. Then what does it say? The reviewer and the practice unit shall mutually cooperate and ensure that the entire peer review process is completed within 20 working days. The entire process is completed within the 20 working days. And in case of the peer review of a new unit, the peer review process is completed within the 7 working days, right? And the on-site review, earlier it says it should not exceed the 7 working days. Now what does it say? It should not exceed the 6 working days. It should not exceed the 6 working days. Okay, right. And then what does it say? The peer review of a new unit is to be conducted by of the partners and parameters announced. And again, the application cum questionnaire submitted by the practice unit. And then the report has to be submitted to the board. So that's a new concept over there, peer review of the new unit. What is a new unit? established for less than 12 months and provided or not provided the assurance services, or established for more than 12 months but has not provided any assurance services. Okay, right. Then reporting to be read as the reporting by the peer reviewer, no problem. Okay, now what does it say in the reporting? In case if you are of the opinion, right, that the practice unit has all complied with all the policies and procedures, there is no non-compliance, then directly you can send the peer review report to the peer review board along with a copy to the practice unit. So peer review report to the peer review board along with a copy of the report to the practice unit. So in that case, there is no need to send the preliminary report and all. What does it say? After completing the on-site review, the reviewer shall submit the peer review report if in his opinion the practice unit has adequate systems and procedures, and a copy of the report will be forwarded to the practice unit. Right, so no preliminary report, response to the preliminary report in case if it is adequate, then directly the peer review report, and directly then it will come the peer review certificate. Okay, right. However, if the peer reviewer is of the opinion that the systems and procedures at the practice unit are deficient or they are non-compliant, then in that case he will submit a preliminary report to the practice unit. He will issue a preliminary report to the practice unit, and now the practice unit within 2 working days have to give their representations to the preliminary report. Right, so now what does it say? In case if any systems or procedures are deficient or non-compliant, then the reviewer will send to the practice unit the preliminary report, and then the practice unit within 2 days have to give their submissions or representations to the reviewer. And then again, same 2 things can happen. What are the same 2 things which can happen? Reviewer is satisfied with the responses, or the reviewer is not satisfied with the responses. If the reviewer is satisfied with the responses, then he will issue a unqualified peer review report to the board, and a copy of the report will be forwarded to the practice unit. Right, so he will issue an, if he is satisfied with the responses, he will issue an unqualified peer review report to the peer review board, and also send a copy to the practice unit. Okay, right. When otherwise, what does it say? If the reviewer is of the opinion that the response submitted by the practice unit is not satisfactory, the reviewer shall submit a qualified report to the board. So now if they are not satisfied with the responses, then what does it say? They will issue a qualified report to the peer review board, and also send a copy of the report to the practice unit incorporating the reasons for the same, and a copy of the same will also be forwarded to the practice unit. Then the peer review report should state the system of quality control for the assurance services for the period under review, whether it has been designed to carry out the assurance services as per the technical, ethical and the professional standards. Then the peer reviewer shall ensure to submit the following documents along with the peer review report. Right, so could be a retail question in your exams. Okay, along with your peer review report, what documents are to be given by the peer reviewer? Right, so annexures to the report as would be prescribed by the board. Then the copy of the questionnaire, you know the copy of the questionnaire, which form it was? Form 1. Then the list of the samples selected by him in accordance with the criteria, and then the preliminary report if any. This has to be attached to your peer review report. Right? This has to be attached to your peer review report. What has to be attached? Annexures, then the questionnaire, then the samples and the preliminary report if any. Okay, all these documents have to be dated, signed and complete in all aspects. Then they have to mutually cooperate to ensure that the entire review gets completed within the 20 working days. And what does it say? In case of the peer review of a new unit, the entire review should be completed within the 7 working days. Right, it should be completed within the 7 working days. And in case of new unit, they also say that the on-site review should not be for more than 1 working day. In case of the new unit, they also say generally on-site review should not extend the 6 working days, but in case of the new unit, it should not exceed the 1 working day. Okay, right. Then what does it say? The peer review board secretary shall ensure that the peer review report is accompanied by all the documents. Right. Then now, in case of a qualified report, right. So now what you have issued to the peer review board is the qualified report. They can order a follow-on review to be conducted after 1 month, 1 year to 6 months. So this is same. What was there earlier also. If the reviewer is not satisfied with the responses, he will issue a qualified report to the peer review board and also submit a copy to the practice unit. And then what does it say? The peer review board may order a follow-on review to be conducted after 1 year to 6 months from the date of the issue of the report. And then issuance of the peer review certificate. Right? In case of an unqualified report issued by the peer reviewer, the peer review board secretary shall place the matter before the board or its committees and the issuance of the peer review certificate to the practice unit, but only after the reviewer confirms the fee receipt from the practice unit. So again, they can make an MCQ. The fees have not been received by the reviewer. So it says no, the certificate will not be given. Right. Then the peer review certificate shall be issued to new units subject to the procedures followed by the reviewer under clause 8 of these guidelines. Certificates so issued shall be noted by the board at its meetings. Then shall be signed by the chairperson, vice chairperson, secretary. Peer review secretary shall serve the peer review certificate upon the practice unit. They'll update the list of the practice units having the valid peer review certificates. Then what does it say? In case of a qualified report, the peer review board secretary will inform the practice unit that a peer review certificate cannot be issued and the date of conducting the follow-on review and the date of conducting the follow-on review. And what is the validity of peer review certificate? It is valid for a period of 3 years or such other period as may be decided. Yes, for such period as may be decided. Right. So that is the discussion regarding the peer review. So thankfully we had not studied the peer review process. So we got to read directly the new peer review process only over there. Is it clear to all of you? Right. So that is regarding the peer review. And then let's come to the ethics part of the discussion over there. Right? What are the amendments regarding the ethics? You remember base layer, middle layer, upper layer, top layer? Or gone from the top layer? Okay, right? So it says top layer will remain empty. Anyways, they've said that, that the top layer will remain empty. Right. So otherwise, they talk about the base layer, the middle layer, the upper layer, and the top layer. Upper layer, when will it increase, shift to the top layer? When there is a substantial increase in the potential systemic risk. Okay. Right. Now, here they are saying the existing provision and the revised provision in 410.3 and 410.6 of the of the code of ethics, volume 1. Right. So if I come to the code of ethics, right, this is what is the 410.3, 410.4, 410. Right, 5 and the 6. Okay, and they are talking about these are the existing provisions, and now they are talking about the changes to this provision. What were the existing provision? That if from one client you are receiving more than 15% of the total fees of your firm, say the total receipts of your firm are 100 crore, and out of that 15 crore is coming from the one client, then you have to give the disclosure for the same. Now what does it say? Disclose to TCWG of the audit client? No, now you have to disclose it to the institute. Now you have to disclose it to the institute. Earlier, how much it was? 15%. Now, what does it say? If it exceeds more than 40% in case of the non-public interest entities, and if it exceeds 20% of the total fees of the firm in case of the public interest entities, right? So earlier it was 15%. Now it has been revised to the 40% and the 20% for the non-public interest entities and for the public interest entities. Are you getting that? Then what does it say? This will not be applicable if the fees received by the firm does not exceed, total fees received by the firm does not exceed 20 lakh rupees, right? So new practice and the receipts of your firm do not exceed the 20 lakh. Earlier it was 5 lakh, right? Then this provision regarding the reporting of the fees, disclosure of the fees is not applicable to audit of the government companies, public undertaking, nationalized bank, public financial institution, where the appointment of the auditors are made by the government. In addition to these categories, regulators has been added. Right, so what you need to add in addition to that, regulators has been added. Okay, right. What were the existing provision? And then you have the revised provision. What is the existing provision? Disclosure to TCWG with of the audit client. Now here, what does it say? Disclosure to the institute, and pre-issuance review and post-issuance review, it says that has been repealed, that has been removed. Okay, so what are the important takeaways for us? Instead of 15%, now it is 40% and the 20%. Then instead of the 5 lakh, now it is the 20 lakh. And then into this list of exemptions, what has been added over there is the regulators and the disclosure to the TCWG of the audit client. The disclosures have to be made to the institute, and this provision has been revealed. Okay, yes, repealed. Then tax services to the audit clients, right? So what does it say? Court will not include the tribunal. Right? So in case of assistance in the resolution of tax disputes, the term court is explained as court depends on the tax hearings, but here what they've clarified, court does not include the tribunal. And then finally, NOCLAR is applicable to the exams, and in the NOCLAR they've also brought some changes over there, right? So now first what we will do, we will come to the NOCLAR in the chapter of the ethics. Anyways, we were left with the discussion of the NOCLAR, right? So we'll complete with the discussion of the NOCLAR, right? Non-compliance with the applicable laws and regulations. Okay, right? So first thing which we need to study is the applicability of the NOCLAR. Right, first thing which we need to study is the applicability of the NOCLAR. To whom it is applicable? It is applicable to the auditors of the listed entities, and it is applicable to the employees of the listed entity. So auditors of listed entity and employees, including the senior professional accountants of the listed entity. So as of now, applicable to auditors of listed entity and the employees of the listed entity. So what does it say over here? Applicability of NOCLAR, it will be applicable to all assignments and to all employers. However, right now the applicability is restricted to assignment of listed entities in case of members in practice, and members in service being restricted to employees of the listed entity only. So that's from the applicability of the NOCLAR. Okay, right. Now what do we study in SA 250? The laws and regulations which are applicable to an entity have been prima facie divided under two. One, laws and regulations which have a direct effect, and second, the other laws and regulations which may have a material effect on the financial statements in case of the non-compliance, which may have a material effect in case of the non-compliance. Okay, now this NOCLAR is more like the whistleblower policy. What happens when the employee of the listed entity, or you are the auditor of the listed entity, and while doing the audit, or when you are the employee of the listed entity, say you're eating the food in the canteen and you come to know that there is some adulteration happening in the food in the canteen. Right? There is some adulteration. Now this adulteration, is it in the public interest? Will it cause substantial harm to the interest of the public over there, or to all the 20,000 people working in the company? Will it affect the financial statements? No. Will it have a material effect on financial statements also? No. But is it in the public interest that it will cause the substantial harm? So it says yes. Auditor or chartered accountant, you cannot turn a blind eye to a NOCLAR or a potential NOCLAR. You cannot say, no, I didn't see anything. I don't know anything. Because earlier there was no requirement of any law which required you to say. But now it has been put into your code of ethics. Like you come to know that this company is going to do the terrorist financing. Right? So now you say that is not included in my responsibility to report to anybody. But you are the auditor of a listed entity, or you are an employee of a listed entity, and you come to know about such non-compliances. So it could be the non-compliance which have a direct effect. It could be the other laws and regulations, or it could be those non-compliances which could have a substantial harm of the public, or it is in the public interest, right? Or it is in the public interest. Then what does it say? You need to bring it to the attention of the appropriate authority. Now generally what we do, we first bring it to the attention of the management TCWG. And generally whenever we come to know any NOCLAR, we will bring it to the attention of the management TCWG. But what will happen if I come to know they are doing terrorist financing, and if I first tell it to the management TCWG, they will reverse their plan. So what does it say? In extreme scenario, you can directly report to the regulator. Right? So here you have a facility given over there. Okay, extreme scenario, auditor or employee directly, instead of reporting to the audit committee or the TCWG, to the management of the company, you can directly report it to the regulator. Are you understanding that? Because otherwise it might be covered up. Okay, right? So that is what we are talking about, the applicability of NOCLAR. That is point number one. Then point number two, which is regarding the meaning of NOCLAR. What is the meaning of the NOCLAR? A non-compliance non-compliance with the law regulation, non-compliance with the law regulation, omission, commission, intentional or unintentional, done by whom? Done by a client or by the TCWG of the client or the management of the client or other individuals working under the direction of the client. Are you getting the words over there? Right. So this is all for the CA in practice. And then you have the CA in service, professional accountants, employee organization, employing organization, employing organization, employing organization. So this is for the CA in service. Are you understanding? CA in practice and CA in service. And what does it say? NOCLAR does not deal with the personal misconduct of the employees of the company. That one of the employee of the company is doing rash driving. Now, will that be covered in NOCLAR? No, that will not be covered in the NOCLAR. Okay, personal misconduct not covered. Right. Then third, coming to the examples of the NOCLAR. What are the examples of the NOCLAR? Could be a direct question in your exam. So two points over there. One, the fraud, corruption and the bribery. So fraud, corruption, bribery requires money laundering, terrorist financing and proceeds of crime. Right. So fraud, corruption, bribery goes hand in hand with the money laundering, terrorist financing and the proceeds of crime. Then securities market and the trading, which goes hand in hand with the banking and other financial products and the services. Then data protection, along with that also the environment protection. And then public health and safety. Like you know some Bhopal gas tragedy which happened, that some gas is leaking which is hazardous to the health of the people. Right. So again, what does it say? It's relating to the public health and safety. Or you come to know there is some lead or zinc in the food which is being manufactured by the company. Right. So public health and safety, and also the tax and pension liabilities and the payments. Okay. Right. So these are the examples of the NOCLAR. Right. So 5-star question over there. Right. Then what is the objective of NOCLAR over there? Not to turn a blind eye to a potential NOCLAR. Right, not to turn a blind eye. You say, no, I am not required to tell anybody. But now it has been put in your code of ethics. So not to turn a blind eye to a potential NOCLAR. Are you understanding that? Right. Then what does it say? Some important facts about the NOCLAR. What are the important facts about the NOCLAR? Are you now going to specifically, when you're working in a listed entity or doing audit of a listed entity, try to do some special investigation to find out non-compliances? Not required to investigate. Not expected to have the greater than required knowledge of the laws and regulations, not expected to have a level of knowledge than which is required for doing the audit of the financial statements. Then it is not covering the personal misconduct. And again, what does it say? Disclosure of the matter to an appropriate authority would be precluded if it is not allowed by the law regulation. Right? If not allowed by law regulation, will you do the disclosure of NOCLAR? Then you will not do the disclosure of the NOCLAR. So that is point number 5. Then you have an interesting question over there, which is NOCLAR versus SA 250. Right? So SA 250 is applicable only on the audit and not on the other assurance engagement, whereas NOCLAR is applicable to professional accountants in service and in practice. Right, so SA 250 is only applicable for stat audit, whereas NOCLAR is applicable to CA in practice who is doing audit of listed entity, and CA in service who is doing the service in a listed entity. Okay, then SA 250 talks about the laws and regulations which have a direct effect and the other laws and regulations. Then what does it say? NOCLAR being alike to SA 250 till this point, it further ahead takes into account the non-compliances that can cause the substantial harm resulting in serious consequences in financial or non-financial term. This is not covered in SA 250. Are you able to follow this? 250 covers direct effect and the other laws and regulation. NOCLAR covers direct effect and other laws and regulations, but it also covers the non-compliance that can cause the substantial harm. Then 250 does not define the stakeholders, but NOCLAR is related to the non-compliance of the investors, creditors, employees, as also the general public, right? So it covers all of them. Then what does it say? In NOCLAR, you have in extreme circumstances, right? You could directly communicate to the appropriate authority. NOCLAR in exceptional circumstances, he may directly report to the of an imminent breach of law regulation. He may directly report the matter to the appropriate authority. However, no such provision is there in SA 250. No such provision is there in SA 250. So that is NOCLAR versus the SA 250. Are you understanding that? NOCLAR only applicable for audit, whereas, right, what does it say? sorry, SA 250 only applicable for the audit, whereas no CLAR applicable for the auditors of listed entity and the employees of the listed entity. Then 250 and no CLAR, what is the scope? Then 250 does not define the stakeholder. Then there is no such provision in the 250, right? So that is no CLAR versus SA 250, right? Then it also talks about the responding to no CLAR, right? So that is the point number 7, responding to the no CLAR. So how do you respond to a no CLAR? First, if you come to know about non-compliance, you understand the matter. After you understand the matter, you don't turn a blind eye, you address the matter. Then you know that this matter is very tricky, I'm not very sure. So what you can do, you can seek the legal advice. After the advice, you can determine the further action which is needed. Then decide whether you need to disclose the matter to the appropriate authority, and then you also need to keep the adequate documentation. Right, so understand the matter, then address the matter, seek advice, then determine whether further action is needed, whether you need to report it to the appropriate authority, and you also need to keep the documentation. What documentation? That the yes, that you have done the responsibility of public interest has been fulfilled. Accountant should be satisfied what? That the responsibility, I have prevented a great, what you say, mishap from happening. And so the responsibility of the public interest has been fulfilled. Then is it that if you tell about the non-compliance, will it lead to breach of confidentiality? No, it will not lead to the breach of confidentiality, because it is required by the law for member in practice and for member in service. And then you also have the documentation requirement of the no CLAR. Okay, right. So these are the basic provisions of no CLAR. Now let us come to the no CLAR, which is there in our particular amendments over there, right? So what does it say? Applicable to all employees of listed entities. So applicable to the senior professionals. So what does it say? Existing provisions and the revised provision. So revised provision, what does it say? Applicable to the senior professional accountants in service being employees of the listed entities. So instead of all employees, now they've made it only applicable to the senior professional accountants. And senior professional accountant means who are the directors, officers, senior employees able to exert the significant influence regarding acquisition, deployment of control. And then what does it say? No change in this. It is further explained that senior professional accountants refer to the key managerial personnel. So senior professional accountants refers to the key managerial personnel. Then what does it say? Applicable to audit of all the listed entities, audit engagement, but now also applicable to audit engagements of entities where the shares are listed on the recognized stock exchange and having a net worth of 250 crore or more. So now they've put a condition, cannot all listed entities, those listed entities having a net worth of more than 250 crore. Right? So here, instead of all employees, now it is only applicable to the senior professional accountants. Then instead of being applicable to all listed entities, now it is only applicable to those listed entities which are having a net worth of more than 250 crore, right? Then audit engagement, it says no change in the definition of the audit engagement, reasonable assurance, and measures to be taken in case of imminent breach. Imminent breach is what is about to be happen. Which is about to be happen. It says measures to be taken in that case have been repealed, right? So that has been removed. Okay.